Accounting for NCA. Evaluate the most appropriate method of calculating depreciation. The straight-line method should be used for assets that are expected to earn revenue evenly over their useful working lives, / those whose value will decline gradually over their useful lives. It is also generally used where the pattern of an asset's earning power is uncertain. It should always be used to write off the costs of assets / fixed lives, i.e. leases. The reducing balance method should be used when it is considered that an asset's earning power will diminish as the asset gets older / when the asset loses more of its value in the early years of its life, e.g. a car / delivery vehicle. Provides a more realistic charge against profits, 1, as some assets lose more value in their first years, 1, / as the asset reduces in value so the depreciation charge reduces, 1. Is more complicated to calculate, 1, as the charge changes each year because it is based on the decreasing net book value at the beginning of each year, 1, rather than the more straightforward equal charge per year when using the straight-line method, 1. Why is reducing balance method more appropriate for assets, i.e. computer equipment? Computer equipment tends to fall in value more in the early years. 1. They lose value very quickly due to obsolescence / technological changes. 1. The reducing balance method depreciates the assets more in the earlier years and less in later years, 1, which matches the fall in value of computer equipment, 1. The straight-line method of depreciation depreciates assets at the same amount each year, 1, which does not match the rapid loss in value. 1. The revaluation method should be used for NCA that are difficult to keep track of, e.g. loose tools. Why is the revaluation method of depreciation appropriate for assets, i.e. loose tools? It is not worthwhile keeping individual records of loose tools, 1, as they are usually many small value items, 1, and are difficult to keep track of. 1, they are easily broken, damaged / lost and have to be regularly replaced. 1. The individual tools may not cost enough to treat them as separate assets. Each tool may have a different useful life. However, their total value may be quite large.